Good afternoon from Los Angeles and welcome to Stock Market Today. On today's show, we're going to be checking in on the charts of Disney, Inspire Medical, and TJX. But before we get to those, let's check in on the major indexes. It's Alyssa Corum and I'm joined by Justin Nielsen. And Justin, terrible Tuesday was followed by weak Wednesday.
Yeah, it's just not looking good out there.
Yeah.
And this is one of the things where you have to be very careful of, getting too excited at the start. So where did we end?
The NASDAQ finished up about 0.2% only, while the S&P and Dow both reversed lower. And we were also questioning, was this going to be an inside day maybe? And no, it was not.
Yeah, so an inside day, that's where you have the high of the day is inside or under the high of the previous day, and the low is above or inside the low of the previous day. And that was not the case here because we did, as Ali said, undercut those lows. What we saw here this morning is things were looking very strong. Things were, looking like it was a good bounce, but that's not something where you want to be getting too excited, because what can happen a lot of times is you get that kind of dead count bounce that you almost expect when you come down so hard, and that's not the time to be getting excited. That's not the time to be buying. You have to do some waiting, especially because, as you and Ed talked about yesterday, that vertical violation, that usually means that you're going to have some time before something works here, and that's why we wait for the follow-through day. And even with the follow-through day, you have to recognize that those signals don't always work, especially after a vertical violation. Your first one or two might fail.
Yeah, that's right. And a lot of stocks now breaking down with the widespread weakness. Disney among them, losing about 3.7% today in heavy turnover on top of losses earlier in the week. Not only is it getting hit by the coronavirus news with its parks abroad, but also we have Bob Iger now officially stepping aside, and he is being replaced by their parks chief. So the market also reacting to that. And 2019 was such an exciting year for Disney stock and Disney shareholders with Disney Plus coming out. There was a lot of hype surrounding that, but boy, is this stock really breaking down now.
Yeah, and so this is one of the things that I wanted to point out. Today, it's not really a story of buying opportunities right now, but what can you learn from what we just went through? So with Disney, we had this on both Leaderboard and on Swing Trader because of that strong move it had in November after 10 million subscribers joined Disney Plus in the first day. So absolutely amazing. But what we also kind of saw was this drift down. And so this is why it's very important that you have to have an exit strategy before you go into any trade, because what can happen is if you don't, you might just say, oh, well, it's just down a little bit. It's just down a little bit. And, there's the story of the frog in boiling water that, before too long, the frog is dead, and it never, reacted to the fact that the water was getting warmer. So you don't want that to happen in your stocks, as this just kind of eased under its 10-week line. Again, you could have said, oh, well, it doesn't look too bad, but now, things are obviously bad, and if you didn't have that exit strategy well ahead of time, you could have been easily 20% off your high, if you had held through this whole thing.
Yes, those sell rules are super key, especially now. And another rule that's also key to follow is you don't want to be buying stocks during a market correction.
Right.
So even if you see a strong earnings gap like we did today with Inspire Medical, that stock ended up closing the day up about 8%, but it was up much more than that earlier in the day, but faded well into the close.
And that was the story with a lot of stocks today. You saw these strong moves, and it looked like, oh, look, there's things to talk about. So on IBD Live today, I was manning the Q&A, and so someone mentioned, actually more than one person mentioned, what about this breakout, this INSP? That looks great. A couple things about it. It's in the medical field. It does not have earnings, so it's not profitable. Has some pretty good sales, but that right off from the bat makes it a little bit more speculative. And I'm not looking to get more speculative when the market environment is as risky as it is. I want kind of the safer things right now. That's one. But number two is, it had a strong open. It opened up 7%, and it was up as much as 20%. And that's where it was really kind of, people were getting excited. The market looked like it was, roaring back, because it was up significantly. But then look at where we ended. It's not how you start, it's how you end the day.
Yes.
That's often very important and very telling on what kind of market environment you're in. And this is just something that we saw over and over in a lot of stocks today, where the ending was just very poor, as they might have ended up for the day, but just gave up a lot of gains. And when you start closing in the lower part of your range, it just doesn't look good.
Right.
Yeah, I can tell by your face.
Yeah. Both of our faces.
Yeah.
Not something you want to be touching right now. Although TJX did have a great day on its earnings report, gaining over 7%, heavy volume there as well, after really strong declines yesterday for the stock, undercutting that key 50-day line. But even still, it closed about in the middle-ish of its range. This is a weekly chart here. Not a time that you want to be buying.
Yeah, but what you do at this point is you start building that watch list. What stocks are holding up well, and I think you guys covered Burlington yesterday,
yes.
and there are a lot of retailers, the discount retailers in particular, that look good. And this is one where the relative strength line is getting much stronger because this is holding up well relative to the S&P 500 and to other stocks out there. So when you start seeing that relative strength line increasing during a correction, those are the stocks that you want to be building your watch list on. So as you guys talked about yesterday, this is not the time to just go to sleep and cancel your paper. Don't do that. It's really the time to be very active, looking for those next ones that could be the big winners. A lot of things that are great about this. I mean, my family personally loves home goods. It's amazing you can actually find little toys there, pretty cheaply for my son, my 5-year-old. But there's a lot that this had going for it. Dividend increasing, share buybacks, and solid earnings. So
yeah, nice acceleration on the top and bottom line. So we'll definitely keep TJX on our radar. But as Justin mentioned, this is the time to stay engaged, build that watch list, keep it updated. And I know the place where all the watch list stocks will be discussed, and that is IBD Live. And you can check out all the details about that at investors.com/IBD Live. Daily interactive discussion starting 10 minutes before the opening bell, running through the first hour plus of trade. Not only are we breaking down those charts and those fundamentals, all the metrics that you want to look at for individual stocks, the broader market, bringing perspective to that as well, but also that Q&A section, getting your questions answered in real time.
Well, and one of the things that we've been I think that people have been very appreciative of in the last few days is kind of that walking through of what happens when, it's very easy to panic in situations like this, and what are some strategies that you can do to avoid that panic. So we talked a lot about a hedging strategy using SQQQ. We've been talking a lot about, okay, which ones are your first ones that you go out, that you exit from in your portfolio. Mike has got some great stuff on that. So it's just really kind of walking people through that whole process and kind of helping them through that so that you keep the gains that you had from the beginning of this year.
Yes, exactly. And when you have the market expertise like we have, this didn't come as a surprise to us. No. We were ready for it. We saw the signals, and we've been reacting appropriately.
Right. On Swing Trader, we were out pretty much Thursday. We had one stock on Friday, and then we were out of that. So it's again, this is not something that's unusual at all. We never know what the catalyst is going to be. In this case, it was coronavirus, but you have to have those rules in place to make sure that you're doing the right thing.
Exactly. Well, just as suddenly as this big market drop started, it could also turn around very quickly. So we are ready and waiting, and we will be monitoring all those signals as they come.
Absolutely.
All right. Thanks, Justin. And thank you all for watching. You can also check us out across social media, whether that's on Facebook, Instagram, YouTube, or Twitter. Reach out to us. We'd love to hear from you. Thanks for watching, and we'll see you right back here tomorrow.